Dallas, it's fascinating what's happening in terms of your earnings, your numbers, what you paint, the picture you paint, 98% occupancy, about 74% of residents always renewing their leases. But you're seeing rents go up. And I'm interested as to what that says about the US economy. I was sort of led to believe that, well, you know, we're worried about jobs not rebounding. We're concerned about an economy bouncing back. You don't see that in rents.
No, I think as you look at US housing, what's been remarkable through the pandemic is it's really exacerbated the fact that there's just not enough supply, generally speaking. And we're certainly seeing that as it equates to demand. In our business, you're right, 98.4% occupancy. We're seeing incredible rate growth around rents in parts of the country where there's just not enough supply meeting that demand.
Talk to us about those areas of the country. Where are you seeing rents pick up the most? And is there going to be supply to come on to match it at some point?
Well, there's a lot of factors that are going into it. I think as you look at our portfolio, we're positioned on what we call the smile markets, which is largely coastal, Southwest, and Southeast. And, you know, the U.S. story has been one of net migration to the South over the last several years, really like the last couple of decades. And so you're going to continue to see that pressure as you see household formation being almost 2.5 times the U.S. average in these parts of the country. What we are not sure of is how much risk are builders willing to take right now in terms of where costs around cost of goods sold and some of the supply chain challenges have been, particularly related to COVID. I think as you start to see that ease, you'll probably see builders taking on a bit more risk or maybe enhancing that risk profile to build a bit more. But the numbers are definitely healthy. I think the issue is really the drag over the last 10 years. We needed to bring somewhere between, say, 1.2 million and 1.5 million units every year into this economy just to keep up with normal household formation. Between 2008 and 2020, many of those years, that number was less than half that. So there was some scarring from the earlier pandemic. It'll take a while for it to catch up, but I anticipate with the market being there, that it will slowly start to come in and feed in and ease some of those supply issues.
Even with higher lumber costs, as we've spoken about, concerns about labor shortages, is that a concern at all or enough to stop builders from taking that risk?
Yeah, they're both real concerns. I think as you think about the labor challenges in the market, we see that even in our own business. There are not enough skilled workers and I would say entry-level workers for some of these positions that are in construction and the trades, et cetera. That's something the current administration is going to have to spend some time thinking about. I think in terms of the cost of goods sold challenges, most of the folks that we talk to believe that it'll stay relatively elevated for a while, but then over some time and distance as factories, lumber mills, you know, things like that come back online, we'll start to see that pressure ease. And my guess is it's going to be pretty expensive through summer, and hopefully in the back part of the year, we start to see some relief there.
How are you thinking about the eviction bans? Have those gone on too long? When do you expect those, if at all, when at all, to end?
Your guess is as good as ours as to when all of these markets start to normalize. I'll say in some states, they've taken a more aggressive approach than others. The important thing is that I think most companies, I can speak for ours and many of our peers, have done the right thing. We are still working with residents that have been impacted by COVID-19. But your point about the market not being normal has created some challenges. It's definitely made it easier for companies to stay more full, whether people are paying or not. Therein lies some of the challenges with new inventory, just from a market perspective. So I think the government's going to have, at the federal level, is really going to have to spend some time thinking about how smart is it to stay in that type of an approach and for how long. We're going into a year now. Housing markets are relatively stable. Jobs are coming back and the economy has momentum. We'd certainly like to see the markets normalize as much as they can while being a responsible landlord and making sure we're helping those that have been impacted by the pandemic.
Dallas, how many of your tenants have been impacted? How many are you seeing unable to pay rents, particularly as you're seeing rents go up?
Well, we have 81,000 homes across our 16 markets, and we've worked with several thousand of our customers going back to the spring of last year until now to be able to help stagger, structure, work with them to however to fit their needs, balance, forgive if there's challenges that aren't able to be met, and been able to kind of find that happy medium with most of our residents. We want to work with folks. I mean, we've always had high occupancy. Going into the pandemic, we were 97% plus. Yeah. So that number's continued to come down over time, but there's certainly folks that we're going to still be helping through the latter part of this year.